Good afternoon, everyone. I have a topic which is, post-lunch, so you can imagine, but I'll try to relate it in our life, and it's more to be um, in the fund management specifically. I have to talk. So many of you would have, related this to the artificial intelligence in terms of what is it? It's simply put, it is seeking to build computers which can think like human being, which can see, which can hear, which can understand human mind. So have you played, what is the simplest example that I could relate is playing chess. Have you ever played chess with the computer? You could relate it. Computer will realize what is the next move, and then the computer will actually plan his moves accordingly. In investment management, what is the AI is the set of programs which simulate how a fund manager or analyst will think and how he will reason or give rational to the investment argument that he has. So the process of information collection and providing insights for a better decision making is what artificial intelligence programs aim as far as investment management is concerned. Now, other part of investment management is also how you execute your trades, and therefore the optimizing trading cost is something which is what AI will do. Now the next slide is a bit complicated and you may not be able to read, but this is nothing but artificial facets of artificial intelligence, machine learning, deep learning. Deep learning is nothing but you use the program to create a particular set of input. You further process that input till you arrive at a final decision. People in if you look at on the internet kind of experiences people have shared on artificial intelligence, the speech pattern recognition has been used to generate red flags in the conference calls. How managements of same companies have been talking about giving guidance, talking about their businesses. So speech patterns over so many con calls of a given person, management are analyzed to get some insights. The other example is image recognition. Now, many of you are familiar with image recognition. So there are examples like people have used the movement of oil tankers to find out what could be the supply trend as far as oil is concerned, and they have had an upper hand in terms of expecting the oil supply movements. Similarly, language processing is something which is used to find out, digging into the regulatory filings, annual report, corporate filings, whatever is there in the internet space or in the businesses around, to find out what are the related parties involved in the business. So typically the banks which was thinking that it was 4 to 5 related accounts actually was surprised that there were 800 related parties when they could use the natural language processing and things like that. So typically you would see that what AI facilitates is nothing but computing power. So human brain is having limitations. Computer will, kind of collect lots of data, historic data on numerous variables, events, and try to crowd out the emotions. This is very important. Like Warren Buffett has said, to invest successfully over a lifetime, what's needed is sound intellectual framework for making decisions and the ability to keep emotions away from corroding your decisions. So giving a data, a kind of finite insight which is free from the emotions, the rationality is what is given by the artificial intelligence. And it also gives insights on what are the opportunities for the fund managers in terms of making money, pricing anomalies that could be there. Typical investment management process is divided between research, the fund management, and trade execution. Now, I'm going to go by one in these each function, what it is and where we have been using artificial intelligence in various of these functions. So if you look at research, for example, it's a investment philosophy is very important. So research starts from what philosophy we have. At UTI, we have a philosophy, of course, like any other active fund manager, is to have wealth creation, have a long time horizon, have alpha generation, as Harish pointed out, and the style discipline. With this investment philosophy, our research analysts have, and the fund managers together, have created a universe. Now, UTI investment universe talks about how well we can cover the various diversity that we have in terms of the fund management styles, how well it can be covered. What is important is the cash flow and the return on capital employed. And based on these thoughts, the analyst builds in-house financial models, and these models and databases can be available at a click of button. So that is the artificial intelligence which is in practice at UTI as far as the retrieval of data is concerned and availability of data is concerned at a click of button. So we also have sector neutral research fund to judge the analyst. Now, how research function will shape up tomorrow with the artificial intelligence. I gave you example of using the speech pattern recognition or image recognition for getting some insights. So today's analyst job is more of data inputting, creating Excel sheets, and maintaining that data. So there is a lot of standardized and repetitive work which will get over by the artificial intelligence programs will do this work. You will have, analyst will have much more quality time to spend on what the insights AI is giving and how his rating can, based on those insights which humanly was not possible earlier, how his rating can be sharpened. So these are some of the things which are times to come. Definitely it will improve the decision making as far as the analysts are concerned. Now let's look at fund management. What we do at fund management is based on the investment mandate and the individual fund manager style, we would screen our universe to find out what are the criteria that we would like to look at. So for example, if I'm a growth at reasonable price fund manager, I will have some criteria around the valuation. If I'm also applying a filter of return on capital employed, quality growth, then somebody who is like Ajay Tyagi, who manages high ROC portfolios, growth-oriented portfolios like equity fund, he will look at that as a criteria filter which is set into. So equity screens, I would say, is a part of artificial intelligence. So it's not that you have to have certain, a very big kind of a thing. The use of technology, use of various databases that are available, screening them, this is one of the things which you could give as example which is being used. The access to historic research at a click of button, I discussed that, and the portfolio construction based on the equity screens that which are run every day. That is one thing. When it comes to passive funds have to mimic index as closely as possible. So here, artificial intelligence is very important, and I'll come to that in a minute. So periodic rebalancing for passive funds is something which is required and which needs to be done because that space is getting highly competitive. So quant model for asset allocation is another example of artificial intelligence that's used in UTI, and we use that model for our multi-asset fund, which invests in equity, gold, and debt. So this model is in-house developed. It is based on certain parameters, and I'll come to that quickly. Algorithms are also being developed, which are based on momentum to take or recommend stock level for this fund, stock level actions. AI in fund management typically, I will give you example of this model which we have. Now, that is a statistical analysis of Nifty index over last 10-15 years. What we have essentially done is we have studied various variables which have a high correlation with Nifty or which have a high impact. You know, in statistical terms, some of you who know, where R square is higher, that is the coefficient of determination is very high, Those kind of variables we have selected, top 11 variables, and we have seen that the predictability, see, artificial intelligence is used to get better insights and to give better prediction of future so that you inculcate those into your decision making for improved outcomes. So this model is used for multi-asset, as I said, and the stock level recommendations are given by the model, but fund manager has to follow the asset allocation as suggested by the model, and he has the total discretion as far as whether the stocks which are recommended for action, which stocks to consider or which to not. So this is the result that this model has given in past, that one and a half year we are using this. So at 11,000 of Nifty, the model suggested decrease in weight. So the weight was decreased from 46% to 40%, and market movement till next rebalancing was -2. So ended into a positive kind of call. In June, market was at 10,800. The model suggested increase from 39% to 45%. Again, the market movement was positive here. And the big positive came in August last year. We had 11,400 of index. 46% was brought down to 40%, and the market corrected 10%. And the next one is, we are yet to see the final change in the weight, which is suggested. We have increased from 40 to 47 at lower levels of index, and the next rebalancing will suggest what has been the gain or benefit or loss on this particular strategy. Third important process in the trading process is another important part of investment management. Here, the trade execution is so important, and it is extremely critical, as I said, for index funds and ETFs. Just to give you some numbers, now the growth in ETF has been so stupendous that the industry has grown very rapidly into index and ETFs, more because EPFO money is coming up. Now, to give you competitive landscape there, UTI's funds, ETFs, today on 6-month basis, we have the lowest tracking error, and our closest competitor is also having very little difference from what our tracking errors has been. While the size of the fund reduces tracking error, but there is also an important contribution from the way you are executing the trades, how close you are to the final closing price, which is recognized for NAV calculation. To give you numbers, the index fund tracking error used to be 40 basis point. That has dropped to about 10 to 12 basis point. 1/4 they have come. And ETFs, where the fund doesn't take the differences between the closing price, it is borne by the investors. The tracking error are as low as they have come down from 4 basis point. You would have at 4 basis point, you would have thought where the downside is, where we can improve further. But those have come down to 1.5 basis point. So clearly, these are important functions, and we have a good amount of artificial intelligence already sitting in trading function. So if you look at the intermediary, for example, on the trade execution on whom we depend, they actually have automated trading platforms. So they have ready-made AI platforms, artificial intelligence platforms, which are known as black box. And plus, they put their proprietary software. And in spite of the softwares and artificial intelligence platform, there has to be a human interference or human judgment, the trader's judgment, to have best quality execution. Because when the commissions are falling day by day, what is differentiating is how better you are able to deliver, how optimized kind of trade execution you are doing. That means filling the order also, and at the much lower deviation, and also at the much lower impact cost. So from that perspective, this is what is happening. Time weighted is one method that they use. They break the order to per second order also. So, in 1 second or one line can have 400 trades per machine. So if you have 4 machines, that means the broker or the intermediary has ability to process 1600 trades at a time. And the slicing of trades means you are able to participate at that particular pricing point. The other way to do is volume-weighted averages. Volume-weighted averages, what these AI platforms are giving is, the trader can choose how many weights, how many kind of previous VWAP curves he wants to use. So typically on an FNO kind of closing day, trader may choose to use last 3 FNO patterns of the VWAP curve and put the quantity around that. So why he does it? Because it is highly predictable that probably the stock will continue to follow that VWAP curve this time also. So these are some of the techniques that have been used on the trade execution. Of course, a block trade tends to take VWAP anywhere, because that is not what machines can factor in. But there, the human intervention can actually immediately know where to place, and then there is a human judgment also. So this is something which I wanted to tell you, and like direct market access is another thing where a broker has a co-located server, and high frequency trading is also gaining momentum, especially foreign kind of funds are using this to generate income on a daily basis. So you can actually specify that I want to do X quantity at this much spread, and then accordingly the traders execute that. Just last 2 slides, and before, after that we will go for Q&A. I hope I'm in time, for I have still 8 minutes. So though initially I was just looking at it and rushing up, so I think it's fine. So AI is useful in augmenting the capabilities. So I would tend to believe AI is nothing but an additional facility that a professional investment professional has. It's not that I should not think that it is a kind of a competition of machine versus man. And why I say that? Because till today, we don't have machines which have built in all the experiences of so many years. Those are there to take an informed decision. So therefore, I think the model which will be there is AI plus HI, that is human intelligence. So some people have compared it with assisted driving. So many of you would have shifted from a manual driving to automated driving, So, and we are talking about a driverless cars. So while we are moving to that, this is something like assisted investing. And I think in advisory also, though this is not my topic today, but while I was surfing on this topic, I have realized that in advisory also it will provide you much more, I would say, capabilities in terms of handling different plans, customized plan. And if you're doing X today, time to come, you will do multiples of X as far as your business is concerned. So that is what something which we are looking for as far as AI is concerned. Domain expertise of whether it is analysts, fund managers, or advisors will remain a key. So they will not be replaced, but it will be a kind of important thing that we should see. And AI as a threat to go ahead, I think there is no place for complacency. We have to accept that machines have far better computing power, far better memory to remember and process that memory in proper time to get into informed insight. So most efficient markets like passive funds, high frequency trading is more or less will move on to the quantitative platform. But there will be space for human intelligence to stay. And human judgment, as I said, is very important. And therefore, whether the insight which is provided by the computers or artificial intelligence, whether it is actually an opportunity or it is a potential risk, this judgment still machines cannot take for time to come. And therefore, I think there is an human intelligence required. But definitely, the last line which I want to emphasize here is that This will lead consolidation in the investment profession. You will see top 15, 20 organizations who are able to invest on AI as well as have ability to employ the investment professionals. These will stay. As a concluding remark, I just want to give you one particular thought how AI in trading, it has become very important part. So for Goldman Sachs, the 600 traders, the job that they were doing, much higher job is being done by 2 traders. But there are 200 computer engineers who are supporting this trading platform. So already, the world is moving towards that. And at this point of time and for the foreseeable time of, I would say, 10 to 15 years before all these experiences of people in investment profession gets built into machine programming, there is a time for all of us to focus on domain expertise, but technical knowledge is also going to be very important. Last few minutes for Q&A, if at all they have.